Ever wondered what a Bitcoin ETF is and why it's making such a buzz in the crypto world? Well, let's delve into it. A Bitcoin exchange-traded fund, or ETF, is a type of investment fund that tracks the price of Bitcoin, allowing investors to buy into the fund and indirectly invest in Bitcoin without the need to actually own the cryptocurrency. This can be particularly appealing to institutional investors who might be hesitant to invest directly in Bitcoin due to regulatory or security concerns. Now, why are Bitcoin ETFs creating such a stir? Well, the idea is that the approval of Bitcoin ETFs could significantly broaden the investor base for Bitcoin by providing a more accessible and regulated way to invest in this digital asset. This has the potential to bring more liquidity and stability to the Bitcoin market. It's not just crypto enthusiasts who are interested in this development either. Major financial institutions such as BlackRock, Fidelity, and Franklin Templeton have shown interest in offering Bitcoin ETFs, indicating a growing acceptance of Bitcoin in the traditional finance world. The concept of Bitcoin ETFs is not new, but the journey to their approval has been a long and winding one. So buckle up as we take a ride through the history, current state, and future possibilities of Bitcoin ETFs in the upcoming segments. The history of Bitcoin ETFs is a tale of anticipation and regulatory hurdles. For years, the financial world has been abuzz with the potential of Bitcoin ETFs, a unique financial instrument that would allow institutional investors easy access to the volatile yet lucrative world of Bitcoin. The story begins with the first proposals for Bitcoin ETFs, which came pouring in from various applicants, each eager to be the first to offer this new product to the market. Major players like BlackRock, Fidelity, and Franklin Templeton were among those who submitted applications to the U.S. Securities and Exchange Commission, or the SEC, for approval. However, the road to approval was anything but smooth. The SEC, tasked with ensuring the safety and integrity of the financial market, had its reservations. Concerns over market manipulation, insufficient liquidity, and regulatory compliance were among the chief reasons cited for the delay in approval. This led to a series of rejections that left many applicants and crypto enthusiasts disappointed. Yet, the pursuit for approval didn't stop there. Applicants continued to refine their proposals, addressing the SEC's concerns and providing further safeguards to protect investors. This continued for years, with the SEC evaluating more than a dozen applications but stopping short of giving the green light. Throughout this period, Bitcoin futures contracts became available, providing a glimmer of hope for those eager for a Bitcoin ETF. These contracts allowed investors to speculate on the future price of Bitcoin, providing a regulated way to gain exposure to the cryptocurrency. Despite the setbacks, the hope for Bitcoin ETFs never faded, leading us to the current state of affairs. With the SEC expected to announce its decision soon, the anticipation is higher than ever. As we stand on the brink of a potential revolution in the Bitcoin market, we look forward to what the future holds. Don't forget to like this video and subscribe to our channel for more insightful content on cryptocurrencies. Fast forward to today, the landscape of Bitcoin ETFs is on the brink of a major breakthrough. The U.S. Securities and Exchange Commission, or SEC, is currently evaluating over a dozen applications for the approval of Spot Bitcoin ETFs. Now, these aren't just any ETFs, these are Spot Bitcoin ETFs, which means they would directly own Bitcoin. The anticipation surrounding this potential approval is palpable. Analysts are predicting that at least one of these proposals is likely to get the green light, and when that happens, we could be looking at a tsunami of institutional investment pouring into Bitcoin. Major financial institutions like BlackRock, Fidelity, and Franklin Templeton are lining up to offer these Bitcoin ETFs, a clear sign of the growing interest in this digital asset. But the expectations regarding the impact of this approval are far from unanimous. Some speculate that we could see only a few $100 million of initial flows into Bitcoin. Others, however, are predicting a radical shift in Bitcoin's supply and demand dynamics, leading to what they're calling a potential supply shock. Now, it's important to remember that while the approval of Bitcoin ETFs could bring a windfall of investment, it's not all smooth sailing. Some analysts are warning of a potential sell-off in Bitcoin following the approval of the ETFs, a phenomenon we've seen in previous market events. Global economic conditions and unrealized profits in the market also add layers of complexity to Bitcoin's future price movements. Moreover, the SEC has until January 10th to act on at least one of these applications. If approved, trading could begin as early as the next business day, making the landscape of Bitcoin ETFs a fast-paced and dynamic world to watch. The approval of Bitcoin ETFs could be a game changer, but it's not without its potential risks and uncertainties. The future of Bitcoin ETFs is clouded with speculation and high expectations. As we stand at the brink of a potentially monumental shift in the crypto market, the anticipation is palpable. The approval of a spot Bitcoin exchange-traded fund, or ETF, by the Securities and Exchange Commission, or SEC, could lead to a tidal wave of institutional investment in Bitcoin. Analysts are divided on the potential impact of this approval. Some predict initial flows of only a few $100 million, while others foresee a radical shift in supply and demand dynamics, possibly resulting in a so-called supply shock. If we turn to history for insights, the launches of other ETFs, like the Spider Gold Shares ETF and the ProShares Bitcoin Strategy ETF, suggest potential inflows and asset growth could be significant. However, it's not all smooth sailing. Some analysts warn of a potential sell-off in Bitcoin following the approval of the ETFs. This echoes prior market events where anticipation built up leading to the event, only for the price to drop once the news was out. It's the classic case of buy the rumor, sell the news. Moreover, other factors could influence Bitcoin's future price movements. Global economic conditions such as inflation rates, interest rates, and geopolitical tensions can sway investor sentiment and impact the trajectory of Bitcoin's price. Unrealized profits in the market also add an element of uncertainty. If a large number of investors decide to cash in their profits following the approval of Bitcoin ETFs, this could put downward pressure on Bitcoin's price. Yet, amidst all these considerations, one thing is clear. The approval of Bitcoin ETFs could set the stage for a new era in the cryptocurrency market. It would open the doors to a wider investor base, providing a level of comfort to institutional investors who have so far been hesitant to dive into the world of cryptocurrencies. And while the path ahead may be fraught with uncertainty, it's certainly an exciting time to be a part of the crypto ecosystem. As we await the final verdict on Bitcoin ETFs, let's recap the key points from our discussion. We started with a basic understanding of Bitcoin ETFs, which are investment vehicles that would allow institutional and retail investors to gain exposure to Bitcoin without the need to directly own the asset. We then ventured into the history of Bitcoin ETFs, exploring various proposals and the regulatory hurdles faced so far. In discussing the current state of Bitcoin ETFs, we noted that the Securities and Exchange Commission is evaluating more than a dozen applications, and we explored the anticipation surrounding a potential approval. This could trigger a wave of institutional investment in Bitcoin, potentially altering supply and demand dynamics. Looking at the future, we speculated on the potential impact of Bitcoin ETFs from a modest inflow of investment to a potential supply shock in the Bitcoin market. We also noted that the outcome could be influenced by factors such as global economic conditions and unrealized profits in the market. Regardless of the outcome, the journey of Bitcoin ETFs is a testament to the evolving nature of the cryptocurrency market. Stay tuned for more updates as we follow this exciting development in the world of crypto.